Hello students, this is your Mr. GST CA Vishnuvardhan, and in this video quickly we are going to revise composition scheme concept. As you all know, composition scheme benefit is available in section 10 in two different subsections. Subsection 1 read along with subsection 2 and next subsection 2a. Subsection 10 section 10 subsection 1 and 2 combined reading, we can understand this option is available for people dealing with goods and restaurant service providers. That means you may be a manufacturer, you may be a trader, or you may be a restaurant service provider. You can enjoy section 10 subsection 1 and subsection 2. So in composition scheme, you know, when you opt for composition scheme, you're opting for composition scheme whether you're eligible or not is purely depending on your aggregate turnover in the preceding financial year. Under section 10 subsection 1, if your aggregate turnover in the preceding financial year does not exceed 150 lakhs, and if it is special category states, it is 75 lakhs. For us to remember special category states, we have a memory code here, stunning ma'am. So stunning ma'am is the code for remembering 75 lakh limit states. So Sikkim, Tripura, Uttarakhand, Nagaland, Manipur, Arunachal Pradesh, Mizoram, Meghalaya. Just remember stunning ma'am here. In stunning ma'am, A for Arunachal Pradesh, not Assam. Remember stunning ma'am because she is watching the sunrise in Arunachal Pradesh. Okay, so stunning ma'am, remember that way. In that cases 75 lakhs, all other cases 150 lakhs. Coming back to the concept, sir, section 10 subsection 1 is available for people dealing with goods. That means you may be a manufacturer or you may be a trader, and also if you are a restaurant service provider, for you also this option is available. But this option is available only based upon your aggregate turnover in the preceding financial year. If your aggregate turnover in the preceding financial year is exceeding 150 lakhs, then you are not eligible. If it is not exceeding, that means less than or equal to 150 lakhs, then you are eligible for composition scheme current financial year. I repeat, whether you are eligible for composition scheme or not in this current financial year, we will check with the aggregate turnover limit of the preceding financial year. So 150 lakhs in normal states and 75 lakhs in special category states, then you are eligible for composition scheme. So if you are eligible for composition scheme, sir, what is the advantage? The advantage is you can pay tax at composition rates, not normal rates. That means if you are selling furniture 12% GST rate, you can pay tax at composition rate 1% instead of paying 12%. So that is the benefit. So if you are a composition dealer, you can pay tax at composition rates. What is that rate now? Manufacturer means he will pay 1% of the turnover. Trader, he will pay 1% of the taxable turnover. Restaurant service provider will pay 5% on the turnover. So here if you see properly, the trader alone is having one relaxation, that is he will pay 1% tax on the taxable turnover. Remaining people will pay tax on total turnover, no matter whether it is taxable or exempt. Okay, so here when I say 1%, it is half percent CGST, half percent SGST. When I say 5%, 2.5% plus 2.5%. Okay, so if you are a special category state, if you are in special category state, then the threshold limit is 75 lakhs, not 150 lakhs. Okay, so that is the concept. Right now, sir, for other service providers or who are not eligible for section 10 subsection 1 benefit, they can go with section 10 subsection 2a. Section 10 subsection 2a, ditto same, only thing threshold limit changes, it is 50 lakhs no matter in which state you are, and tax rate is 6%, not 1% or 5%, it is 6%, 3% plus 3%. I repeat, who are not eligible for section 10 subsection 1 can go for section 10 subsection 2a, but technically speaking subsection 2a will be mainly for the people who are going through services. People dealing with goods can go with this. Okay, but here in section 10 subsection 1, another point what we have to understand is, if you are in section 10 subsection 1, you should not provide any services other than restaurant services, but the law is giving you permission to provide marginal services. That means even though you are under section 10 subsection 1, other than restaurant services, you can provide 10% of the turnover in the state in the preceding financial year, or 5 lakhs, whichever is high, that much amount of turnover. That means, see for example, in the preceding financial year 22-23, you have 3 states, 3 branches, 3 registrations: Andhra Pradesh, Tamil Nadu, Karnataka. Each state you are doing 70 lakhs, 60 lakh, 10 lakhs. That means 140 lakhs aggregate turnover. Aggregate turnover, you know, pan India basis we have to take the aggregate turnover, and aggregate turnover meaning is what? Nothing but, sir, it includes everything: taxable supplies, exempt supplies, even interstate supplies between people having the same pan, that is distinct persons. Okay, from Andhra to Tamil Nadu, if we do any sale here, that means supply as per schedule 1, that is also added in aggregate turnover, but only when it is interstate. Okay, so fine, coming to the point, sir, aggregate turnover, when you see, sir, 140 lakhs in preceding financial year 22-23, I am eligible for composition scheme in 23-24. So in 23-24, in Andhra Pradesh I can do, one second. In Andhra Pradesh, I can do 10% of the turnover, 10% of the turnover in that state in the preceding financial year. That means 10% of 70 lakhs, 10% of 60 lakhs, or 10% of 10 lakhs, or 5 lakhs, whichever is higher. So here 7 lakhs or 6 lakhs or 5 lakhs. So this way, sir, in 23-24, I can make this much of services, this much of services, this much of services, even though I am going with section 10 subsection 1 benefit. But understand, when you are providing these services, when you are going with this limit is extra than restaurant services, and in this limit we will not calculate your income by providing services of extending loans, advances, or deposits. Remember, always see, when you are allowing somebody to use your money and charging interest or some other consideration, that means you are doing service. For that you are receiving consideration, and that is exempt under GST, you know it. But that service we will ignore for anything in section 10. I repeat, maintain a thumb rule. Remember a thumb rule, that is, sir, for the purpose of section 10, for the purpose of section 10, you are calculating aggregate turnover, you are calculating the tax amount, or whatever it is, the threshold limits, whatever it is. Sir, ignore one fellow. That fellow is nothing but the interest income earned by way of extending loans, advances, or deposits. Clear? So that is what the point, right? So we will ignore that, and apart from that you can provide. So I repeat here, you have the benefit, you have the benefit, for state wise, you have the benefit to provide some small amount of service that we are calling as marginal supply of services. Okay, that you can provide. But other than that, you cannot provide anything if you are in section 10 subsection 1 option. Okay, so that is what the concept. Now, sir, okay, fine, we have understood that. Two subsections are talking about composition scheme. One subsection is all about manufacturer, trader, and restaurant service provider. The next one is service providers other than restaurant service providers, or who are not eligible for section 10 subsection 1. Threshold limits 150 lakhs, 75 lakhs, and this side 50 lakhs. Here tax rates are 1%, 1%, 5%, here 6%. But trader, you have seen one different point, sir. For trader, what is there? Trader only enjoys one benefit, that is what? He will pay tax only on the taxable turnover, not on the total turnover. Okay, so if the trader who is buying and selling is selling taxable goods as well as exempt goods, he will pay 1% tax only on the sale of taxable goods, not on the exempt goods. But for manufacturer, he is selling taxable goods as well as exempt goods. He is manufacturing and selling, so he will pay on the total turnover 1%. Okay, now, so that is what the point. So I repeat, sir, when you are going for composition scheme, what is the benefit? Number one, you need not pay tax at normal rates. Number two, one thing we should remember, we cannot take ITC, and we cannot collect GST from the customer. So then this is not beneficial. If you feel like this is not beneficial for you, don't go with the composition scheme, because this is optional, that is not mandatory, nobody is forcing you. So those are the points. Okay, and I also taught you one thumb rule. Okay, fine, sir, that interest income you please ignore. Next, aggregate turnover meaning. I told you, sir, aggregate turnover, taxable supplies, exempt supplies, exports, interstate supplies of persons having same PAN, all these things you please add it, sir. So all these things, like as I was telling, taxable, exempt, exports, and interstate supplies of persons having same PAN, you please add all those things. That means here there can be intrastate, interstate, non-taxable, everything. The exempt supply means here the definition says wholly exempt, nil rated, non-taxable, everything. In simple terms, I'm telling you, whatever the sales you are making, you take it as aggregate turnover. Simple. Only sales, not purchases. So intrastate supplies between distinct persons not considered in aggregate turnover. Number one, clarity. Next, what and all I should not include in turnover. Taxes don't add. That means CGST, SGST, UTGST, IGST, GST compensation says any other tax other than GST, you should add it to the turnover. Okay. Then, and all inward supplies covered under RCM. That means inward supplies covered under RCM, sir. Yes, you are paying GST on them. You need not add them in your turnover because it is not your sale. I told you, aggregate turnover, simple logic is it is your sale, it is not your purchase. Sir, can I add my inward supplies covered under forward charge in my aggregate turnover? Inward supplies your purchase, it will never be your turnover. Clear? So aggregate turnover means only sales, not purchases. Okay, so that way you calculate the aggregate turnover. Okay, sir. Now coming to the point, as I was telling, we have discussed tax rates, composition tax rates. Composition tax rates are 1%, 1%, and 5%. But if it is section 10 subsection 2a, it is 6%. We have discussed that also. Next, the important thing, sir, who cannot go for composition scheme? Who cannot opt for composition scheme? Sir, who cannot opt for composition scheme under section 10 subsection 1 means, sir, who is providing service other than restaurant service, and marginal supply of service option is available for you. So other than marginal supply of service, you should be doing only restaurant service, any other service within the limit of marginal supply. If you are doing it more than, for example, I'm selling ACs and some small amount of servicing also I'm doing, no problem if it is within the limit. If it is beyond the limit, I cannot go with 10 subsection 1. Then what should I do? You can go with section 10 subsection 2a. Are you understanding the point? So I'm selling ACs also in equal proportion, sir. I'm servicing them also in equal proportion. For you, section 10.1 is not applicable. Go with 10.2a. Okay. So that is what we are trying to tell. Okay. Next one. What is next one? You should not provide services not liable to GST. Okay. You can supply even non-taxable goods, but you cannot provide services not leviable to GST. That is very important point for you. Please mark it important. Next, you should not be making any interstate. You should not be making any interstate outward supply of goods or service. That means interstate sales is not allowed. Interstate purchase is allowed, but you should not make interstate sales. That is another condition. You should not be supplying services through e-commerce operator attracting TCS. Okay, you can supply goods through e-commerce operator, that is possible. Okay, but if you are under composition scheme, you cannot supply services through e-commerce operator who has to collect tax at source under section 52. Okay, very another important point for you. And also, sir, you should not be a manufacturer. You should not be a manufacturer of certain notified products. What are those? The ice cream, pan masala, tobacco, manufactured tobacco, aerated waters, fly ash bricks, fly ash aggregates, fly ash blocks, bricks of fossil meats or similar siliceous earths or building bricks, earthing or roofing tiles. You should not be manufacturing and selling them, sir. Trader, yes, fine, he is eligible, but manufacturer is not eligible. So please understand, here we are not targeting this Amul ice creams or any like quality walls ice cream. They are not even eligible because their aggregate turnover itself is exceeding 150 lakhs. Here we are targeting only people like we will be seeing, no, near our house there will be some during summer season, etc. The local ice cream vendors will be coming. They'll manufacture and they'll bring. Or we are not talking about Coca-Cola, Pepsi here, aerated waters. We are talking about local goli soda manufacturers and sellers. So for such people who are already completely unorganized sector, for those people we don't want to give any relaxation. So manufacturing and selling them, you are not eligible for composition scheme. If you are buying and selling any these items, then you are happily eligible for composition scheme. You can enjoy the benefit. Okay. Next, if you are a casual taxable person or a non-resident taxable person, you cannot go for composition scheme. And sir, I have multiple registrations. I was showing in the example Andhra, Tamil Nadu, Karnataka, all that. Sir, when you are calculating aggregate turnover, you will calculate the aggregate turnover on pan-India basis, correct? So, here when you have multiple registrations, whether they are eligible or not for composition scheme. See here, guys, in the soft copy I have given various examples. Please go through the examples clearly. No issues at all. Now, see, for example, when we are going with this particular example, sir, I have a company where Telangana I am doing 58 lakhs, Karnataka I am doing 76 lakhs, Andhra Pradesh I am doing 10 lakhs turnover. In that case, whether I am eligible for composition scheme or not, we will see aggregate turnover. That means all the states, whatever the turnover is there, that together we will take and see whether it is exceeding 150 lakhs or not. Here, if it is not exceeding 150 lakhs, then all the branches having all the multiple registrations, they are eligible for composition scheme. They are eligible for composition scheme. So what they should do, every branch should go for composition scheme if they want, or every branch should follow normal scheme. It is not like here in Telangana I will go for composition scheme, in Andhra I will go for normal scheme, or in Karnataka I will go for composition scheme. Like that you cannot do. Either all branches go for composition scheme or all the branches go for normal scheme. That is very important for you. And one more interesting catch here is, please understand that if at all you have any one branch in a special category state and one outside special category state, then the threshold limit will fall down from 150 lakhs to 75 lakhs. For example, here if I have branch not in Andhra Pradesh but in Manipur, then the aggregate turnover, the threshold limit is not 150 lakhs. For everybody it is 75 lakhs. So please remember that. So those questions, answers, everything has been given here. You can just go through. Okay, I have given very good number of examples. Please go through all the examples. Let us focus in this video only on the conceptual clarity. Okay, so as I told you, sir, all registered persons with the same PAN number must opt for composition scheme, or all should follow normal scheme. It is not like one fellow is going composition, one fellow is going for normal scheme. And one more important thing is, if one branch doesn't want to opt for composition scheme or wants to go for normal scheme, or one branch contravenes the provisions under composition scheme, then all the remaining branches will become ineligible for composition scheme. That is what I have told you. Marginal supply of services, I told you, sir, under section 10 subsection 1, if you are opting for composition scheme, you can still provide some services other than restaurant services, other than interest income. You can still provide some services, extra services, 10% of the turnover in the state, not aggregate turnover. Always remember, Aggregate turnover is different, turnover is different. So aggregate turnover we are not talking here, sir. For marginal supply of services, 10% of the turnover in that state, okay, or 5 lakhs, whichever is higher, you can provide. So that marginal supply, along with example also I have given here, you can just go through that. And next, there are some procedural things which you can just take care of it. And here one another point I just wanted to share with you is, as I was telling, sir, if you are going for composition scheme, once your entire turnover, aggregate turnover, exceeds the threshold limit of 150 lakh or 75 lakhs, as the case may be, or 50 lakhs, once that aggregate turnover in the current financial year, that means composition scheme benefit is not lifelong. Sir, when your aggregate turnover in the preceding financial year does not exceed the specified limit, current financial year you can go for composition scheme. When you are going with composition scheme in the current financial year, please understand, you can enjoy that till the aggregate turnover touching the threshold limit. That means till my aggregate turnover in the current financial year touches 150 lakhs, I can enjoy composition scheme. Preceding financial year not exceeding 150 lakhs, current financial year up to 150 lakhs, I can enjoy composition scheme. Once the aggregate turnover touches the 150 lakhs threshold limit, now I should come out of composition scheme. I should start paying tax at normal rates. Now I can collect tax from the customer and I can avail ITC on the inward supplies also. Just like a normal taxpayer, sir, everything will be there. Sir, I will be coming out of composition scheme and I should pay tax at normal scheme. Clear? When my aggregate turnover in the current financial year exceeds the threshold limit. Here one more interesting thing is, sir, see, let me show in this example, okay. Or you just go through the examples, I'll just teach you the concept here. See now, sir, what is happening now? Normally when we talk about aggregate turnover, sir, generally understand, whenever we talk about aggregate turnover, we will take on pan India basis whatever the sales we have made from 1st April, let us assume 2025, till 31st March 2026. Whatever you do, sir, whatever the sales you have done on pan India basis, that will be treated as your aggregate turnover. Sir, in pan India basis, let us assume certain period, for example, for 2 months, you are not registered, and balance 10 months you are registered. Then, sir, no matter whether you are unregistered for some period or not, all these things, that means from 1st April whether you are registered or not, that we will see, we will not see, sir, we will just see what and all sales you made from 1st April till 31st March. That's all. That fully will be taken as aggregate turnover. During that period, how long you have been taxable person, how long you have been non-taxable person, whether you are registered or not, we will see aggregate turnover. Means we will see from 1st April to 31st March whatever you have done. Sir, whatever the turnover you have done as a not registered person will be added to what? Will be added to aggregate turnover. Whether you will pay tax on that, whether you should pay tax on that, but no tax payable. Am I clear? So I repeat, aggregate turnover means from 1st April to 31st March, whatever you do, that will be the aggregate turnover. And during that period, during that financial year, you may be unregistered also initially for 2-3 months. During that period, whatever turnover you have done also, that will be added to the aggregate turnover, but no tax is needed to be paid. Okay, on that we have some questions also, examples also. Please make sure you are going through that. I have given good number of questions and examples here for you to solve, so please go through that. So with this, we have completed composition scheme, the provisions point, and obviously there are certain procedural things, sir. Composition scheme, every year you have to keep on selecting whether you want it or you don't want it. If you want to opt for composition scheme, if you are eligible, if you want to opt it, electronically intimate to the proper officer. Simple. While first time when you are applying for registration, sir, every time when you are applying for registration first time, see, you are applying for registration now this year means what does it mean? Preceding financial year your aggregate turnover is not exceeding the threshold limits, or you don't have business, etc., etc. So preceding financial year your aggregate turnover will be definitely less than or equal to 150 lakhs. That is why you are applying for composition scheme. So every time when you are applying for registration, in the registration application itself there will be one point: do you want to opt for composition scheme? If you are eligible and if you want to opt, and you can opt there itself. So first year like that you can decide. From next to subsequent year, what you have to do, before the commencement of the financial year, you check whether you are eligible for composition scheme or not, and intimate it to the proper officer electronically only. Nothing to worry. You need not call him or go and meet him and say, sir, I want composition scheme. All these things not required. So intimate him electronically so that you will get composition scheme in the subsequent years. So that is what the concept. So with this we are done with composition scheme. So this video is helpful for both CA Inter Final and CS CMA, all the levels, whoever is reading composition scheme under GST. The relevant material is uploaded in the Telegram channels. The Telegram channel link is given in the description below. So please do share this video with your friends. See you all in another video. This is your Mr. GST signing off. Jai Hind.